Hey traders, this is Christian from Tribeca Trade Group, and today is Friday, June 10th, and this is your end of day as well as end of market, end of week market video. Risk disclaimer in front of you. Everything that we're going through in this video is for information purposes only. You could read the full risk disclaimer here, but bottom line, everything that we're talking about is for education purposes only. Before we get into the heart of the matter, which is, we'll discuss the today's economics, the kind of lead up into the economics, the market moves, the levels to watch in the indices, a couple other things to look at as well, some indicators to look at, and we will discuss more single stocks and that type of thing over the weekend for members. By the way, if you are not a member, where do you become a member of the Tribeca Trade Group? Well, you can go right to my Twitter feed, right to the pinned link, or you can go right to tribecatradegroup.com and you can bring up our services and products page. We have the elite membership, right? So what does that get you very quickly? And then I promise I will get into today's market activity. But every day, what I do is I send out market thoughts. I send out a couple, interesting charts of the day. I send that out pre-market, and then for those that can attend the pre-market session, right, that starts every day at 9:05. Sometimes I am a couple minutes late, full disclosure, but we go over all the themes of the day, setups, some of the macro movers, definitely commodities, which we've been spending more and more time talking about those moves and what's going on in the bond market. I also do a midday video for members, and then of course you could see what I do real time in terms of the charts that I'm looking at for the day, what I think is interesting, right? You could see kind of, I did not post a lot of things today because, the volatility. And when we have volatility like this, you could just play the indices, right? So we'll go over some charts in there as well. And then of course, what we do on the weekend is very important too, because that sets us up for the week ahead in terms of setups and an overall view on risk taking going into the week. So again, that's at tribecatradegroup.com. You can click there to be a member. I think the trade idea that we put on this week, or that I issued this week, paid for the probably paid for a couple of months of membership. And in this market, I think having that type of trade on really worked well. I'll get into that. I'll talk about that maybe towards the end of the video. So let's get into so sorry to stall there for a minute talking about some other things, but I don't talk about Tribeca Trade Group that much in terms of what you get, as well as you get into view not only into my trades, but what other members are doing, as well as the proprietary trading system that I use, which is the market webs. So let's get right into the PPI report. Yes, worse than expected. This was kind of we kind of got the preview and the price action, what we experienced towards the end of the day yesterday. That was kind of a little bit telling. I think we kind of knew that we were going to get a bad report. What was also alarming was the University of Michigan sentiment number that came out, much weaker than expected. So things are changing. Things are changing kind of quickly. So kind of makes you think, right? The Fed is now pricing in, or in terms of Fed fund futures, right? They're now pricing in 3 interest rate hikes. Some brokers even think that they may raise interest rates next week 75 basis points. That's different. And even though Powell hasn't indicated that, but what the Fed fund futures, right? So there's always a market out there. This is pricing in now a 50 basis point hike in 3 of the next meetings, right? So that's next week, that's July, that's September, right? And so that's a bit of a change in stance. So I actually, so again, this is not great news, right? To hear that the Fed is going to be tightening more, that there's inflation, but at least, again, looking for the silver lining in this, right? At least that the market is pricing in some real damage that's going on in terms of what the Fed is going to do, rather than if the Fed is going to move this aggressively, it should be somewhat priced into the market. It doesn't mean that the market's going to go up once the data, once that comes out, but at least it won't be as much of a shock. So that's what we have there. I'm going to go right to bonds here for a minute. right? And I'm going to talk about the bonds first, because again, I view bonds as being, as I've said now for months, it's a must watch chart, right? We did have a little bit of a risk off type or flight to quality move this morning. Bonds initially went up, but you could see where they landed for the week. Right here is that move, and we knew right where resistance was, but we did break the range of the week also in bonds, right? So why is that important? Well, as yields go higher like this, it makes equities more expensive. All right. Notice that we have a 134.08 VPOC, right? I do think that this gets taken out, right? And that would be a new high in yields for the 30-year. Again, we're looking at bond prices, which move inversely to yields, right? If you want to know what yields are doing, right, you can certainly look here, and we can bring up just to give you a sense of the level of yields at this point. We are dealing with, just blow this up a little bit for you. So right now we've got the 10-year yields is 3.1. We've got the 2-year yield, so it's not inverted as of now, because the 2-year is 3.06, the 10-year is 3.156, and then the 30-year is just a touch higher than the 10-year. That's at 3.193. Okay, we'll come back to that in a second, but the trajectory has been down, and that's a new weekly close, a new low for the weekly close in bonds. Again, very important. All right, so let's talk about where we are. And again, we'll do this the right way. We'll start with the weekly chart. Notice where the price finished for the week, right? Back outside of the value area. You probably heard me talk about this level a couple times this year, 40.71, right? We did get back into inside value. So bear market rally a couple weeks ago, almost like an inside week last week. And we moved right back outside of that value area. So for me, I get a bit more aggressive in terms of, provided, and I'm not just throwing on trades for the hell of it, but as long as there's setups there, I generally look to see if I want to see price get back inside the value area. So where could we be going? Well, I'm going to show you a couple levels on the daily chart in just a second, but S1 is 3771, which is a hair under where we were under for the lows back in the middle of May, and then we've got some other levels if we break this, right? So 3448. Right, so this is the 200 period moving average that comes into play. There's also a VPOC that's lurking down there, but these are pretty, for now, these are levels that are pretty decently away. So I need something I need something closer first to watch. So first of all, let's talk about this 1 hour chart, right? We went over this. If you watched yesterday's video, you knew that we put on a trade. I put it on one directionally, even though I was talking about a strangle originally. And I played this to the short side, made money in this. I took profits at the end of yesterday, rolled that trade. All right, so here's my trade. And I did not put this on big size, right? I rolled the one trade that I made, right? The last target I took was $11, paid $4.50 for this put spread, debit put spread. And then I roll this to today's expiration, 39.90, 39.70. Again, it's not a cheap trade, 620. That's a big outlay. So I did not put that on for large size, but you could see I took this thing off for $18 today. I could have got the whole 20, but at 10 o'clock in the morning, I thought 18 was fine. And then I can kind of get that off my plate for the day. So that worked well. And again, the concept here, why we put this trade on, is because when you have a really thin, narrow value area, that usually means a big move is coming. Now, it's difficult to predict when exactly that move is coming, and nothing is 100%. But if we didn't break this week, I think we really would have, broke for next week. But again, look at the difference between the size and the narrowness of the value area. So very, very tight price action, which often leads to a big move. I think you could kind of see this one too, which was similar type of with, right? That was also a big move to come down to take this VPOC out. So here we are, we're sitting here. We did achieve this VPOC. We actually kept sliding here. So we didn't really come back. So next, what we're going to do is look at the daily chart, because we've kind of achieved those levels to the downside. We don't have any more red lines nearby, right, which are the virgin point of controls. Again, high area of volume that hasn't been revisited. They often act as magnets. Let's look at the daily chart. Well, we did bounce, right, on this kind of double test in here of the last VPOC takeout. So we've got a retest, right? And it's amazing how quickly that happened, because I was saying it wouldn't be the worst thing in the world for us to come back and retest, as it will shake out some of that bullish sentiment that we've kind of added on this bear market rally. So we got a real nice level to watch here in S&P futures. That's 3894.5, right? And that could be violated, come Sunday night, Monday. We'll see. I don't have a crystal ball. Obviously, we had some big downside price action, a big breath thrust to the downside again, right? So when we blow this up, right, we're looking at, and you could look at it here. I put this actually on Bloomberg too, right? So here's what it looks like when we're looking at the way that I did this was down volume over up volume. So it's very close to where we were. Remember, I was on Bloomberg talking about this, and I think I'll be on Bloomberg TV again on next Friday. But I was talking about how this usually needs to take place when you've got a major correction slash bear market, what we've had before. Again, you can kind of look to see when we've had these similar bear market moves before. So again, this was back into that. This is a little bit confusing, because it looks at, that's the 2020 data, but you could see that we've had these at numerous times, right? I'm not going to go into this. I'll go into this a little bit more for members over the weekend, but we didn't get as high as we were earlier in the month. Notice what we've done previously. Maybe I will just bring up a quick SPY chart for you guys in this. I'll cheat and I'll do that. So let me just normalize this for you so that you can, or uncheck that. But so here you go. I think you could see this blue line, but here's other big negative breath thrusts, right? So, take a look at this one, right? This was a big one here. We moved down here, and then the second one that we had wasn't as great as the first, and we ended up kind of rallying off that. So it's one of the things that I've been kind of watching, is when you do have these big down thrusts, what is the market action thereafter, right? Clearly, when we had this one in 2020, right, we actually had this last one here. We had a couple of these in here. But it's kind of you're on a little bit of the road to checking the boxes in terms of things that has to happen in terms of when you have that correction. So again, I'm seeing a lot of that. I think the fact that we did not take out the lows here in the S&P is somewhat of a positive, but again, this is just 2 days. So we just need more time. The other thing to remember too is, and we're in a very weak seasonal period of the year, given it's a midterm election, right? The Almanac Trader has some good information out on that. But if we look at some other things, right? So I want to look at credit spreads for a minute, right? They did spike up a little bit. So this is IEI over HYG. Note, not really that bad, in relation to what we've seen previously. So credits, there's no major damage right now. Right now is the important thing, and we'll see if that changes. Right. So LQD. So let me just bring up the LQD before I forget. Oh, that should be IEF. And LQD. So we'll see investment grade spreads as well. So we looked at high yield spreads. Remember, I go over this quite a bit in the trading room, right? It's important when you look at high yield, the HYG chart or the TIPS chart, which we went over pre-market. It's important to put them in reference to what overall interest rates are doing. Hence, over what treasuries are doing, right? That tells you, right? Because there's always an underlying interest rate move. You have to put it in perspective of what the treasury move. And again, matching that up with duration is important, right? So here's what this looks like, right? Again, not that big of a move, right? I actually put the maximum in here, right? Look at what happened in 2008. Look at what happened in 2020. So we're not there yet. So again, this is kind of looking at things from a structural point of view, not horrible yet. Again, this could change. All right. A couple other things to look at too is the VIX, right? Some people keep telling me like, oh, the VIX is, there's something wrong with the VIX. There's nothing wrong with the VIX. It's still telling you what the market is pricing in terms of short-term volatility, right? So we have a little bit of a divergence there. Even though the VIX was up for the day, it's not doing what it was doing back in here, right? So it's not spiking, it's not above 30. So I think, just if you could kind of sit on the sidelines, we know that the Fed is going to be increasing interest rates. That's not a good thing for the market, but it's getting priced in. Let this play out a little bit, right? Another thing too is let these moving averages kind of come down so that they're a little bit easier. One of the things that I mentioned, and this is specifically with IWM, is that, we're getting capped by this overhead resistance. If you give it more time and the moving averages come down, right? So, look at the 200-day moving average. Right. Sometimes this is just, a matter of time. So, we let this go through for a little bit, longer, maybe get through the summertime, and we might have a decent end of year move. Right. There's a lot of bad news that's out there right now. So let it play out, in my opinion. Try not to get caught too much in these bear market rallies. Right. One of the things that I find constructive is what's going on with the Chinese group, right? The Chinese internets were up 7.8% today, comparatively to what U.S. markets did for the week. SPY down 5%, Q's down 5.7%. That's some big outperformance. So, maybe there's a little bit something positive going on there, right? That's where we spent some time and had some trades on. And I think that's kind of constructive there. Other things that outperformed, it's just interesting the difference between the energy ETFs, right? I want to talk a little bit about that too in just a second. OIH was down 3.9% for the week. I'm not sure. XLEAF was down for the week, but oil and gas, equally weighted, actually finished positive for the week, right? On the downside, SMH semis down 7.4%. That's a big down week. Pot stocks, even though I think pot stocks are actually up today, they're down 9.5%. Again, this is a repricing. This is nothing new. We've been seeing this all year long. Let these things reprice. Some of them are just, were more stories than anything else. And they continue to kind of go down to probably where they should be, right? I didn't go over the Qs chart. I'll do that as well. I'll also talk a little bit about crude. We're not down to the bottom of value yet for NASDAQ futures. That's down at 11,684. All right. I wanted to go over crude as well. Interesting, right? We're seeing all kinds of other commodities break down, right? Look at what copper is doing, right? Copper had that one big rally day about a week and a half ago, giving that back underneath the 200-day moving average. We're seeing, if we look at wheat, right? We're seeing wheat is now underneath the 50-day moving average, right? If you look at what's going on in the commodity stocks, right? Many of them are starting to break down, right? They're below the 50-day moving average. I know a lot of people have been looking at shorts in this group, right? Interesting that energy is still, hanging up there. For now, it looks, these things look okay. Nat gas is above the, above the value area. Crude, right, is also moving up, but I would not, and the trend looks good here for now, but I would not get complacent with this group, right? They've been so strong. This is what XLE is doing, and I actually like that we've got a little bit of a dip here into the 20-day moving average. Again, one of the strongest areas of the market. Right. Let's see how it responds into the 50-day moving average. Right. You also have event risk, right, that's going on in this space. If somehow this conflict gets resolved. Now, I've been saying this for a while, but I still, and granted, I still own energy plays, right? But you have to be mindful of how you're positioning in this group at this point. That's up pretty decently. And it's still retracing a lot of the move of what tech, where tech has outperformed. But this is another VPOC that was taken out up here. And since that one was taken out, you've got a little bit of a retracement going on. Again, there's another one up here at 97. But I would be mindful that price has to get back above that 92.40 VPOC. All right, so a lot of commodities breaking down. Crude, not yet. And again, I'm not saying not yet because it hasn't happened, that it's going to happen. But it's just kind of interesting that many of the other commodities are starting to go down. What about the US dollar? All right, well, US dollar did go higher this week. Here is the performance. If you want to take a look at the performance for the week, UUP was up 1.9%, right? So we had dollar strength, right? And that's up at the top of value. Notice that we have not taken out that yet either. All right, so we don't have a lot of things. Bonds are bonds did have a weekly close below where they previously closed for this year. So that is something that's very interesting. I'm going to take a look at one other chart too. One area that was very strong today was gold. Gold has been, somebody asked me about gold pre-market. A member asked me about it. I did not give a very good answer on it because I said, hey, I got to see something out of gold first. I don't really like flat 200-day moving averages. But I've traded gold a couple times this year, and I've gotten it to work. Specifically, I've traded Newmont Mining, I think twice this year, and I've gotten it to work. So it did have a bullish engulfing candle for the day, right? And let's see if this one wants to kind of get going again. And you could use that 200-day moving average as a stop or the bottom of value. And notice you've got kind of a double bottom look over here. Again, it's been a very difficult group. Gold hasn't acted like an inflation hedge at all, but maybe we'll start to see this outperform a little bit. Again, I'm open to it. Again, I don't like to get on the first, the first move, especially when you've got such a flat 200-day moving average. One other chart that I'll bring up too is, again, somebody asked me about tips today. So I'll bring up what the tip chart looks like. And we could do that versus IEF, right? Also, this did not take out the highs of where we saw in April, but it is moving in the direction of possibly taking that out. Something to watch for next week. That's tip over IEF. All right, guys, that's it for the end of week video. Have a great weekend, and members you'll get a video from me this weekend talking a little bit more in depth. Have a great weekend, everybody.